So under supply selection, choose to be evaluated and evaluation methods we have discussed. What are the issues we have to evaluate when we select the suppliers? What are the issues? Here, objective of mind map is you should thoroughly know about the topics what we have studied under specific topic chapter. Okay, that is the only objective. So, several topics we have discussed under procurement purpose. So, 3 topics I have written here. Request for purchase through purchase execution by production department of stores to whom? Purchase department. Second one, calling quotation. Based on the quotation, we have to select proper supplier. Third one, supplier selection. So normally, low price quoted supply we can select. So, but certain things we have to recheck. So those other alternative things also we are going to discuss under PP supply selection process today. If time comes, we can select. We can discuss today. So let's say already we discussed supply selection. There are 2 subtopics. One is issues. Second one is methods of evaluation. What are the issues we have to evaluate? Before supply selection, I will write bottom of these topics. 2 things we have to consider. What are those 2 things? Choose name. Calling, we have to 2 things when we are selecting supplier. 2 things we have to consider: financial stability and operation value. That is the one only we can elaborate further into 4 issues. We have to check 4 issues. What are those 4 issues? Last class you are whiteboard. Yes. Not formally again, I think. What are the 4 issues to be evaluated when we are selecting supplier? Supplier. Whether supplier can deliver required quantities. First one. Second one. Okay. For that, how we can evaluate that issue? For that, financial sector. Okay, first tell me that what are the issues? Evaluation whether supply can issue required quantity. Second one, continuously whether he can deliver. So you don't need to write what I have given in the queue the same by using the same word. Okay, you write the concept, then you can earn the mark. No issue. Okay, in the queue, I have given a box now. There I have explained. But in the whiteboard, I have used alternative words. So if you write those words enough, you don't need to by heart those each and every word what I have given in the queue. So queue explanation purpose I have given. But the concept you should remember the concept. You should keep the concept in your mind. That is enough. alternative words you can use without changing the concept. If you write by using your word, then you can get the mark. But in audit, you can't use alternative words for certain words. That I will take. We are discussing the audit. I will take these words, no any alternative words. For example, material misstatement means material mistake. You can't write big misstatements, no small misstatements, like that. Okay, material means material. That's the word. So likewise, certain situations we have to use the same word. But here you can use your word also without changing the concept. Okay. What are the other issues? What are the other issues to be evaluated when we are selecting the supplier? Quality. Whether he can deliver the required quality. Required quantity and second one required quality. Continuously, whether he can supply the goods. For that, I have given an example that if you are doing a business, what's the business I have given? Last class example. You are importing shirts from Indian supplier, so you are making profit, continuously you are making profit, going stage, suddenly you stop to supply the goods, then you will be in trouble. In order to mitigate that risk, continuous supply of raw material, any goods, should be delivered by the supplier. So continuous supply, which means whether he has whether financially stability is there or not, stable is there or not, supplier side, that we have to do. Last one. Ethical issues. Okay, these are four issues to be evaluated when we are selecting the supplier. Okay, first one, required quantity. What are the evaluation methods? At least one. Whether he can deliver required quantities or not. That's why our problem now. How to evaluate that issue? Capability. വളരെ പ്രശ്നമായിട്ടാണ് ഡിവിഷൻ exam mark you can see your tut also already all you have been uploaded, including today's session, including plant and inventory. 5 business processes have been uploaded to the LMS. So if you want one. So if you want, you can see, you can tell me. This is not an exam now, just a revision. Balalari කියලා මතක් වෙනවා ඒක ඇති. What is the evaluation method you should adapt to evaluate the first issue, which is whether you can deliver, supplier can deliver required quantity or not. What is the first one evaluation method? You can visit supplier place. Then he has capable to deliver the goods. Second one. What is the second one? Quality. Okay. Okay. Continuous supply. Continuous supply, you have to ensure the financial stability of supplier. So to evaluate that issue, what is the method you can use? So, financial statements, supplier's financial statement you can get. Third one, quality issues. To ensure the quality issues, you can request sample goods. Third one, ethical issues. Representation we have to get from supplier. So this is the third topic. One, supplier selection. Fourth one. What's the fourth one? Confirm the order. For that, what's the document we are using? PO, purchase order. Once confirm the order, goods received. For that, what's the document we are using? DRN. Good return. Debit, no. Just note it down. I will raise and rest of this I will write the fresh page. Okay. Okay. Shall I raise? Just note it down. Okay. Is that pin on? Okay. So under activities, seventh topic, payment. Before that, account. For payment, buyer will use invoice. Purchase invoice. Okay. So these are the 8 topics we discuss under activities of procurement process. Apart from these 8 topics, certain subtopics also we have discussed. What are those subtopics? Budgetary control, risk, and internal control. So these are not part of process, but those are related to procurement process. So we have discussed those topics also. So under other topics, budgetary controls, we discussed. What are the 2 key elements in budgetary controls? In order to prepare a budget, when organizations prepare the budget, what are the 2 things they consider? What are the two things they are considering when they are preparing the budget? In order to prepare the budget, what are the 2 factors they have to consider? Price and quantity. Price and quantity. And risk in procurement process. Budgetary controls, risk in procurement process, account statement, and internal controls of procurement process we discuss. So these are the topics we discuss under procurement process. If anything we miss, anything we missed in the mind map, so I will give each and every chapter after finishing each and every chapter, I will give the mind map. The purpose of mind map, you should thoroughly know about the topics what we have discussed in each topic. Okay, that's the purpose. So you should not miss any topics before going to the exam. Okay. So these are the topics we discuss under procurement process. So note karaganda. So if you complete this one, then we can move on to rest of the things of cash management process. So today we are going to start the cash management process with bank reconciliation. Up to bank reconciliation, we already discussed last class. So bank reconciliation, we are going to start now. So here, in the cash management, quickly we will recap. In the cash management, what are the topics we discussed up to now? Mainly the cash management, as I told you, it's the management process, not like purchase, sales, step-by-step process. It's the management process. When it comes to an organization or company, assets are most important thing. So out of those assets also, cash, inventory, property, plant, and equipment are most important. It doesn't mean other assets are not important. Out of these assets also, cash, because cash is most important. To earn cash only, they are doing the business. So cash, how to manage the cash? How to manage the cash is, that topic is vast area. As I told you, working capital management, ratios, lot of things are there. So we are not going to touch those aspects here. Basic management process only covered in your syllabus. So you earn cash, you have cash, how those cash must be protected properly. So those aspects only we are going to cover, not only cash, other management process also. Today we will start PB. So payment management also those aspects we will cover. So first thing, when it comes to the cash related activity. What are the cash related activities? Receipt and payment. What are the methods of receipt? Banks, notes and coins. Those will be discussed after. Banks, notes and coins, debit, credit card, online transfers, check transfer, check payments. Receipt side, same as payment side as well. So these are the tools we can use to make payments and receipt. So these are transactions. So whatever transaction taken place in relation to the cash or in relation to the receipt of payment activities, first management activity must be is recording transaction. First, you have to record whatever transactions happen. Those must be recorded properly in the books. So recording is the first management activity. In order to record cash transaction, here cash transactions you should remember all these methods. Okay, not only banks, notes, and coins. So I mentioned cash, that includes all these debit, credit card, bank transfer, check transfer, and all four methods. Okay, so if you have payments received, those transactions must be recorded properly in the books. For that, organizations use cash book. Okay, that's the recording part. Okay, all the transactions have been recorded properly. Fine. Bank transactions. Okay, bank transactions. If you are dealing with cash, your cash, banks and notes, coins, bank notes and coins, then you can record in the cash book, no issue. But if you are dealing with bank, like check transfers, example, those transactions are recorded in two places. First place in your books, second place in bank statement. When it comes to cash, notes and coins, what you have received, what you have paid, you can record in the cash book, and physically also you can check. Physical book so physical cash so you can check those physical balances and your cash book. When it comes to bank transfer, bank dealings, you don't have physical money in your drawer. So equal to physical money, we will take bank statement. Okay. So bank statement equal to physical. Physical ATM machine physical bank physical. So bank statement we can consider as a physical cash, like cash in hand. So now bank reconciliation is a part of recording process. We have recorded in the cash book. Now we have to check whether whatever we have recorded in the cash book is physically available. So here physically available means we are going to compare the bank statement. So purpose of bank reconciliation is comparing cash book and bank statement balance. Okay. So note kar next topic under cash management. Bank reconciliation. Okay. Bank reconciliation also part of recording process. If you properly record and if you ensure your recording is correct, only your recording activity will be completed. You have to make sure. It's like this. Just recording with the mistakes, you can't achieve the objective. Recording means what is the objective? Whatever physical cash transactions must be, whatever transactions done by you physically, those transactions must be maintained in your books. Then only your objective will be achieved. So, nikang onakamata record කරලා තිබ්බොත් ඒක achieve වෙන්නේ නැහැ. With errors and mistakes, if you record in the books of accounts or cash book, you can't achieve your intended objective. What is the intended objective of maintaining cash book? Whatever transaction, whatever activities you are doing, you should have an intended objective, no? To achieve the objective. මොකටද ස්ටඩි කරන්නේ? එක්සෑම් පාස් වෙන්න. මොකටද එක්සෑම් පාස් වෙන්න ඕනේ? මොනවද එකක් කියනවානේ ඔබ්ජෙක්ටිව් එකක් කරන්නේ නැහැ. මොකටද ක්ලාසස් එකේ මොනවද කරන ඕන එකට ඔබ්ජෙක්ටිව් එකක් තියන්නේ. පොඩියෝ ලොකු. You should have an objective. What's the objective of maintaining cash flow? Don't think too much. Just simple way you can think and answer. What is the main objective or what is the objective of maintaining the cash flow? In order to ensure the completeness. Whatever transactions you have done, that must be recorded in the cash flow. Then end of the month or end of the week or end of the day, daily basis, you should compare the cash flow balance and physical balance. It must be matched. That's the objective. Maintaining the cash book objective is whether your transaction balances, physical balances, and your book balance are tally. Right? Let's say you are maintaining, whatever the cash book, your daily expenses you are maintaining in the Excel sheet. Okay, the income and expenses you are maintaining in the Excel sheet. What is the objective of maintaining the Excel sheet? Whether I have recorded all the expenses, what I have incurred during the day, or whatever I receive, whether I have recorded in the Excel sheet. End of the day, your end of the day cash in hand balance and Excel sheet balance must be tally. That is the simple concept of cash book also. The same concept you can convert into bank reconciliation as well. So bank reconciliation, whatever bank transaction happen through the bank must be matched with bank statement. So bank reconciliation objective compare cash book and bank statement. Compare cash book and bank statements to ensure whether both balances are matched or tally, whatever. If any differences noticed, if any differences noticed, those differences must be reconciled. Those will be reconciled. Okay, the objective or purpose, importance of bank reconciliation. Okay, here differences. So next one, reasons for differences. Reasons for differences. Most of you are working on. Just tell me what are the differences you can notice in the bank reconciliation. Unpersonal checks, unrealized checks. Anything else? Sorry. Direct payments, unidentified. Okay. Anti-novels. Standing of that we come on the persons that standing orders that have been payments have been other way around. Payments have been directed in bank. Okay, that's also fine. First payments have been directed in the bank, but those have not been incorporated in the dashboard. Fine. Bank. Bank errors. But very rare situation. Bank errors. Yeah, whatever you told, those are correct. So first one, differences, reason for differences. Unprecedented check. So here I'm writing in a short form. The cute I have given the long version. Okay, unprecedented checks. Second, unrealized checks. Unrealized checks. Deductions in bank. Example, bank charges. And return checks. Okay, return checks. And also first it is updated in, will be updated in the bank. Then only you can identify. So return checks done on it. First, you have made the payment. but you are thinking that already paid, but certain reasons that has been returned. Once you receive the bank statement only, you can get to know. So first, return checks transaction will be updated in the bank statement. Very rare situation, bank errors. Very rare situation, bank errors. Okay, so these are the reasons or differences. These two are not errors. Okay, unprecedented and unrealized are not errors. These called timing differences. Okay, timing differences. These are not errors. Okay, this is the summary of bank reconciliation. So now we will move on to note further. Now we will move on to due. Bank reconciliation. Anyone? Bank reconciliation. The cash book balance should be checked against the bank balance. Simply, we can say bank statement balance. Records on a regular basis. It is done by comparing the cash book records with the bank statement that is provided by the bank. It's known as bank reconciliation. Purpose of bank reconciliation: check whether balances of cash book balance and the bank's records can be made accurate. Whether the even known already we wrote in the notebook, so it's a both are same meaning. Identify errors or omissions in the cash book. Possibility, not usually, identify mistakes that have been made by the bank. The bank reconciliation is therefore a control procedure. It's a internal control procedure. Okay? To ensure that all payments from the bank account are properly accounted for and the accounting records for cash are correct. Differences between cash book balances and bank balance. When payments are received, it can take several days to clear the payment through the banking system. When payments are made, it may take some time for the payment to be deducted from the bank account. This is unprecedented. This is unrealized. These timing differences do not represent mistakes. These are timing differences in the cash book or errors by the bank. However, in bank reconciliation, transactions where a receipt has not yet appeared in the bank account and payments not yet deducted from the bank account need to be identified so that the cash book balance and bank balances can be reconciled. Here, unprecedented and unrealized checks must be identified properly. Then only cash book and bank reconciliation will be matched. That's the concept explained here. Other differences: the bank may make charges for its services, bank charges. Occasionally, the bank may reject a check that has been paid into the bank as a cash receipt because the check has bounced. Return checks. Okay, simply you can keep in your mind whatever we have mentioned in the short note. Okay, so next topic: cash investment, means surplus investment. So if the concept of this topic is if you have excess cash, last class also I explained, current account will not give interest income, but still organizations are keeping money in current account. Why? Because of their business transactions. They want to make supplier payments, they should have liquid cash. Liquid cash means, in other terms, it's also cash, no? And liquid cash. So, to make the business transaction, they should have some certain amount of money in their current account. So that each and every organization must analyze, and they should identify what is the amount they should keep in their bank account. Let's say a company, they should have 2 million. At least 1 week time period, they should have 2 million. So if they have 4 million in their account, excess 2 million, they should invest in somewhere else. Then they can earn 1 week interest or any other investment income. So that is the concept we are going to discuss here. Okay, the short concept. So cash surpluses making investments. So if you have excess cash, you can earn more money from that excess cash rather than keeping current account, keeping in the current account. Not only investments, if you want to invest in your other business, you can invest. If you want to put in FD, you can invest. Shares, you can invest. Based on the risk, you can invest excess money in the investment sources. That's the concept here we are going to discuss. An organization may build up temporary cash surplus. Cash held in current bank account earns no interest. Surplus cash can be invested more secure ways, such as deposit accounts with a financial institution or short-term debt securities issued by the government. What is meant by debt security? So you know investments, joint investment, fixed deposit investments. Government debt securities mean treasury bills and bonds. That is risk-free things. Investment should be authorized at appropriate level of management within the organization. If you want to make the investment, so that must be approved by the financial controller, director, some companies director, finance director, or some companies finance controller based on their hierarchy. It's not a small amount. No. You are taking your cash from current account and you are going to invest somewhere else. So you have to get the proper approval before making the investment. The cash used to make the investment should be entered on the payment side of the cash books. These are the transaction how you should enter in the cash book explained here. Money received from the investment will subsequently be entered on the receipt side of the cash. Interest income must be entered in the cash book debit, interest income credit. First one, if you want to make investment account debit, cash book credit. Clear? So these are the points explained here. Next topic, important topic, before discussing petty cash system. So before discussing the tute, we will discuss and we will write the short points. After that, we will come to the tute. Okay? Okay. Petty cash. Petty cash petty cash what is meant by petty cash? What is meant by petty cash? If anyone tells you explain the petty cash, how you can explain in short form? I don't need 2-3 lines explanation. Just I need what is meant by petty cash. What you feel about petty cash? Petty cash yeah, that's enough. So small expenses. Examples. Station expenses or small traveling bus fares. Very small expenses. petty cash means small amount of expenses. Okay, small amount of expense. I have uploaded already questions, sales, purchase, cash management. Today we can complete the cash management. So next class we are going to start questions also. If I'm not mistaken, 9 questions are there. The 9 questions are there. Try and come. Daily basis, every classes we will cover at least 3 questions. So we will start the questions also from next class onwards. Then we can. Otherwise, after completing all these sessions and if you do the questions, it won't work. So continuously we will do the questions, 2 or 3 questions or 3 or 4 based on time. We will continuously do the questions. Okay. Small amount of expenses. Now petty cash has process. Becomes an bank. As I explained you, in the organization or company, small or big, it doesn't matter. Single transaction should have approval authorization. And you should have a document. Verbal communications are not valid. If you do any verbal communication and if you do anything, let's say your superior has asked to make the payment. Okay. He requested you to raise the payment voucher for 50,000. Verbal communication won't be verbal. At least he should say what's up, man. At least. Okay, at least. Worst case. Written format of communication should be available. Or mail. Ideal method is form through form, he has to say, but forget about that ideal method. At least, worst case, you should have mail. Some written format or written type of document you should have. Otherwise, after 1 or 2 months or after 6 months, if the same person may ask why you have raised this payment also. And you should get the approval also. So if you get the approval from the finance director, okay, fine. So the point is, if you do any transaction, that transaction must have written document with approval. That's the concern. Whatever transaction, it doesn't mean small or big. Small means based on that hierarchy, the person should have, not finance director, at least account. The superior person must have to the transactions. So petty cash also process is there. First one, you know what is meant by petty cash, small expense. For that, every organization appoint for that purpose to handle small expenses, every organization appoint petty cashier. So person called petty cashier. So he's the person handling all this small amount of expenses. So accountant he won't handle these small expenses, but he is responsible. Okay, accountant is responsible. Accountant is responsible for entire transaction, accounting the transaction. He can't say I'm not responsible for petty cash things because we have appointed petty cashier so that petty cashier only handle these things. He will handle, but final responsibility is with accountant. So petty cashier will be appointed to handle small amount of transaction. This is the second thing. Okay. Now we are going to discuss about process of petty cash. How petty cashier can take money from accountant and how he should use. Okay, this is the process we are going to discuss. So first one, petty cashier should request the money. I will write in the short form. Petty cashier should Okay. Petty cashier should request cash from accountant because accountant is responsible for entire accounting process. For that, petty cashier will use requisition form. Okay, clear? You should request, or should be in a formal manner. And accountant should withdraw second one, accountant should withdraw the money based on his request. PC means petty cashier. I'm writing in short form. Petty cashier request. Okay. Accountant should withdraw money from bank based on petty cashier request. When he withdraws the money, what's the double entry? In the cash book, in the bank account, sorry, petty cash account, petty cash book, petty cash debit, and relevant bank account credit. Which means petty cash account debit, relevant bank account credit. You should pass this. Otherwise, write first like this. Otherwise, you will get confused. First, before giving to the petty cashier, he withdraws and keep the money now. Then, write cash book debit, bank credit. First, write this one. Okay. So he has withdrawn the money. Now, after withdrawing the money, he should give that money to petty cashier. So at the time of giving the money, cash is given to petty cashier. In this point, petty cash will be cash. In the books, accountant should mention. Accountant only keep those records. Okay. Main cash in hand. Go cash book. Go. Otherwise, write this one cash in hand. The rest will get confused. Rather than mentioning cash flow, cash in hand, right? Just cash in hand. No, anything is okay. Like a simple. But I want to give a clear picture. Otherwise, you will. The කොහොමද මාස් දෙකකට පස්සේ බලන්නේ. එතකොට අමතක වෙනවා. මෙතන cash book කියලා ඉල්ල තියෙනවා. මෙතන cash in hand create කියලා තියෙනවා. මොකටද කියලා බලන්න. Cash in hand කියලා ලියා ගන්න. Okay, cash in hand. So here petty cash debit, cash in hand credit. Fine. Now, up to this point clear, petty cashier has received money from accountants. Clear? So next one, once petty cashier receives money from accountant, he should keep that money in lockable box. Petty cash box. That's called a locker. Here no, lockable petty cash box. Once petty cashier receives money from accountant, he should keep the cash or money lockable petty cash box. Lockable petty cash box. Okay. You should keep the money in lockable petty cash box. So now responsibility is with petty cash. Now next one we go 1 month. You should spend that petty cash amount in proper manner. How he should use that petty cash amount in proper manner, we are going to discuss now. So if now now the relevant person, employees or staff, they may need petty cash for their expenses, not their personal expenses, company expenses. Let's say bus fares, or to make to purchase stationery, stapler, pens like this, small expenses. Relevant person needs to take money from petty cash box. Okay, so let's say person X, employee X wants to get petty cash for some small expenses. Now, relevant person the relevant person must request. Relevant person should request from petty cashier to take that money. Small, let's say 500 rupees. If he wants 500 rupees, he should first ask from petty cashier, not verbally. Okay, not verbally. First, relevant person 11 employee, let's say 11 employee. Request money for specific expense. Example, right? Stationery expense. 500 rupees. Okay. Example. So always we should go with the example, otherwise we can't match with the theory. So relevant employees should request money for specific expenses. Example, right? Stationery expense. Okay, rupees. It's just an example. Okay, 500 rupees. So up to this point, just note it down. I will raise and after I will continue. Note going to make that's space problem. So note it down. I will continue. From this point, I will continue. So make note. Okay then. Okay. So relevant employee should make request for specific expense. In our case, stationery expense, same thing, but I have written here. I have written again. in our case, stationery expenses 500 rupees. So this request, once he made a request, for this petty cash voucher must be generated. For this second step, petty cash voucher should be okay. Petty cash voucher must be raised. Okay. Verbally, he can't make the request. That's why I told each and every transaction, each and every made payment or anything, any activity must be supported by the document. So once he requests for any expenses, petty cash voucher must be generated or raised. This petty cash following, once generate the petty cash voucher, these things what I'm going to write, okay, these things must be followed by the petty cashier and 11%. These things means certain activities must be done. First one, petty cash voucher must include, petty cash voucher must include reason for the expense. Here reason means stationery expenses. That's why I have given the example also. Stationery expenses. In order to make stationery expenses, we need 500 rupees. So stationery expenses. Reason means stationery expenses must include reason for the expense. And sign of relevant person, recipient, acknowledgement of recipient. Once he receives the cash, acknowledgement, relevant person acknowledgement. Relevant employees acknowledgement. Okay, once he receives the cash from the petty cashier, he should sign the petty cash voucher. And approved person signature. Okay, which means petty cash, once he requests that petty cash voucher should be generated, raised, and that petty cash voucher must include relevant reason for the expenses. That must be petty cash voucher, relevant person, relevant employee. Once he receives the money, he should acknowledge, I have received. That acknowledgement should be available, and this petty cash voucher must be approved by authorized person. Normally petty cashier. In normal situation, petty cashier. Example, petty cashier. Okay. Up to this point clear? Okay. Any doubts? Any doubts in the petty cash process? Or any gray area or any clarification you need in the petty cash process? So this is important. This part is important. This part is important because that petty cash voucher must be raised each and every transaction. Okay. And most important thing out of this four also, each and every petty cash voucher must be supported by bills. Okay, or receipt, word or invoice. Any word you can use, simply say invoice or bills. It's stationary, payment voucher is there, but supplier's invoice must be supported to the payment voucher. Payment, petty cash, payment voucher must be supported by bills or invoices. Okay. Petty cash payment vouchers must be supported by bills or invoices or receipt. Last point, after end of month or after given period of time, let's say end of the month, after given period of time, right? Right? So, petty cash payment voucher. Petty cash payment voucher must be supported by bills or invoices. After given period of time, petty cashier should submit but the last process. Let's say April month. Sorry, May. May 1st, petty cashier has received some money, let's say 10,000. He has received money from the accountant and he has paid. End of 31st, May or June 1st. He should do one activity. What's the activity? He has given May 1st 10,000 money from the accountant. He has paid. When made certain amount, he has paid. So end of the month, but what activity he should take? Yeah. So first thing, he must submit the bills. Let's say 10,000. Out of the 10,000, he will not spend entire thing, no. 10,000 will spend right? So let's say he has spent 8,000. So first thing he should give the bills related to the 8,000 with along with the payment vouchers. Payment vouchers plus bills he should submit to the accountant. Okay. And 2,000 remaining balance is there. Next month, that is we are going to discuss separate topic infra system. Okay, fine. Anyway, I will touch this one also here. End of the month, he will, or June 1st or May 31st, he will get another 8,000. What he has spent in May, he should recover from accountant for next month. The same amount. Because petty cash, each and every company should have a company policy. This is the amount maximum they should keep as a petty cash. Some companies, based on their petty cash transactions, it doesn't mean only they should give 10,000. If it is a billion turnover company, billion transactions company, they may keep even 200,000 also petty cash. Okay, this depends on company. But in normal example, we normally take 10,000, 3,000, 30,000 like that. So here we have taken 8,000. So 8,000 he has spent. He must submit payment vouchers, petty cash payment vouchers along with bills. That is important thing. This is most important. Okay. So along with invoices and bills, and he has to get that in 8,000 from accountant for next month. So after given period of time, petty cashier should submit payment vouchers along with bills to accountant. Okay, accountant, and he should get the same amount from accountant for next. These are the steps involved in petty cash process. Okay, just note it down. We will move on to the period. The small point is the last point. Just right after this point, once petty cashier submits these bills and payment voucher to accountant, accountant should keep, accountant should last right last point. Accountant as a last point. Accountant should mark those or record. Accountant should record those expenses in the petty cash. It's like this. Sometimes petty cash can maintain the petty cash book. Depend. Okay. Otherwise, what will happen? End of the month only, accountant will record these things. It depends. But normally, accountant is responsible for petty cash expenses recording also. So that's why I have given this point. So don't misunderstand. Accountant only will do the petty cash recording part. It's responsible. Sometimes, depend on the cases. Sometimes petty cashier will record the petty cash expenses at the time of invention. Most of the cases are that's the practice they are doing. But end of the month, petty cash accountant should take this responsible to this transaction. Here. So you know that in the petty cash book, not like cash book. Separate columns also they are. There was a study then stationaries, box fares, everything transport, everything. A column that I have given in the tutor also. So petty cash system. Most businesses need to keep a small amount of cash to pay a small value of items, small amount of expenses. Simple explanation. Okay. And to reimburse employees for expenses they have paid from their own money. Sometimes first they will get the money and they will spend. Otherwise, they will spend the money and after that they will get the money from petty cash. But finally, bill should be there. The thing. Okay. This money is called petty cash. Readily available value notes and coins is known as petty cash, small cash. Petty cash is used to make low value cash purchases, reimburse employees immediately for valid business expenses they have paid from their own money on their business behalf. This is the process. In detailed version, I have given the whiteboard also. Transferring money into petty cash, the petty cash box. So here 7.1, we are discussing transferring money from accountant to petty cash here. So bottom, payments of petty cash claims. So both of them I have given in one format. Okay, you should remember that form. So for additional thing, you can read these things with that form. Okay, so if you write the answer in that format also correct. Okay. Petty cashier makes a formal requisition for cash to be withdrawn from the bank account in notes and coins. Petty cashier has requested petty cash amount from the accountant through requisition form. First point. The accountant responsible for the bank account arranges for the notes and coins to be provided. So now accountant has withdrawn the money from the bank and records the withdrawal of the money on the payment side of cash book. Cash book credit. Sorry, cash book. It's like this. Don't confuse. Don't get confused here. Cash book, payment side of cash book means at the time of withdrawal, cash in and debit, bank credit. So here, cash book, payment side of cash book means 11 bank account credit. Okay. So this is the entry I have given third step. Petty cash book debit, cash book credit. Okay. The same accountant may also be responsible for maintaining another cash book in the accounting system. This is the petty cash book. That's why I have given in two double entries. Petty cash book, which records all receipts of notes and coins into petty cash and all payments from petty cash. Okay. Any confusion? Making? First withdraw karna, cash in bank, cash in and debit karna, 11 bank credit karna. Then when he gives the money to petty cashier, petty cash debit, cash in and credit. Here, this is the one, petty cash book debit, cash in, cash book credit. Notes and coins to the petty cash and all payments from petty cash. The petty cash book also provides a record of current balance of money held in petty cash. On receipt of bank notes and coins from the bank, the petty cashier puts them into a lockable petty cash box. So recording of petty cash expenses is depend on organization to organization. Sometimes they may record end of the month. Sometimes then and there they may record. Daily basis they may record. Then factory petty cash daily basis depend on cases. The final objective is end of the month all the record must be available. Okay. So ideal situation, my suggestion, daily basis recording. So expense capturing the daily basis recording. So that is the theoretical technical point, daily basis recording. But sometimes because due to some practical difficulties, end of the month, petty cash will all monthly expenses to the account. Okay. Payments of petty cash claims. Payments out of petty cash are made by filling out petty cash also. Clear? The voucher should state reason for the payment. Reason for the payment and the amount of the payment. I will mention the amount, no? Just mention amount also. Whether I have mentioned the amount? Yeah. I have given the 500 rupees example, but whether I have mentioned in the reason and amount, just write amount also. Amount again, so reason and amount. I have given the short note that also I have missed that one. So first, reason and amount. Reason and amount. It should be signed by the person receiving the cash and authorized by an appropriate person, who may be the petty cashier or office manager. Signed by the relevant person. Once he receives the money, he should acknowledge, and that petty cash voucher must be approved by the authorized person, normally petty cashier. A receipt must be also attached to the petty cash voucher as evidence of the expenditure. Receipt means bills and invoices. Okay. This is the petty cash voucher format. Petty cash payments IOU. IOU means if low value of purchase or service is urgently required for company work, such cash for this purpose may be drawn from the petty cash interest. Say 1,000 rupees they need, they will withdraw from the petty cash voucher, petty cash box. All IOUs shall be settled in full within 24 hours. It's like an advance. Okay. So here, there are two types. One is specific purpose, for that purpose you are requesting money. Second one, list of expenses you want to incur within a day, for that you are getting money. Differentiate, you have to differentiate two things. First, yes, stationary expenses I need 500. Oh, another expense, bus fare I need 100 or 200. Likewise, specific expenses, each and every expenses they should write a payment voucher, and first they will get the money and they will spend and they will attach the bill. Second thing, certain group of expenses they need money, 1,000 or 2,000. They in advance they will get. Today morning they will get 2,000 rupees for related expenses, certain expenses. So let's say employee X received today 10 o'clock. Within a day, he should spend those things and he should give relevant bills within 24 hours. Next day morning, he should submit all these relevant bills and how he has used this 1,000 rupees. That explanation and bills has to be submitted. Bills have to be submitted within 24 hours. If any advances, then I owe you I owe you. I am obligation. I have obligation to you. I owe you. So advance we have obtained. He has obtained the advance, and within 24 hours he has to give putting balance. Whatever he has incurred, that bills has to be submitted to the petty cashier within 24 hours. Next day morning he has to give. If within 24 hours any bills have not been submitted, means that must be investigated. Okay. Those are the concept you should know about the IOU. It's an advanced thing. Within 24 hours, those things must be submitted. If within 24 hours, those advances are not submitted, means it must be investigated. All IOUs shall be settled within 24 hours from the time the cash was withdrawn from. The cashier shall prepare daily outstanding IOUs, not to set outstanding IOUs, list of IOUs not settled within 24 hours. So these are the things just for your understanding purpose I have given. So whatever main part we have discussed, other than cash interest, that also we have discussed slightly. So these are the things just for explanation purpose I have given. Just read and understand. Petty cash voucher, recording petty cash claims in the petty cash book. Petty cash vouchers for claims that have been paid should be kept in the petty cash box until they are taken for recording the payments in the petty cash book. A person in the accounts department should enter the petty cash payments in the petty cash book. The petty cash book is similar to cash book with one side for notes and coins received and another side for payments out of petty cash. The payment side of petty cash book has a column for recording all payments and also additional analysis columns for recording the purpose for which the payment was made. This is the one I have told. Petty cash book has some breakups also. Traveling, postage, rental office expenses. You don't know, just not one single column. That single column also classifications are there. So this is, I have given certain points in relation to the petty cash book. How petty cash book is designed. Okay. Another important topic in petty cash, impress petty cash system. Okay. So impress petty cash system means that's a fixed amount is there. I told 10,000, 20,000, 30,000. That is cost income. So in our example, previous example, I told May 1st, petty cashier has received 10,000 money from accountant and he has spent 8,000 during the month. Now he has submitted all the bills and vouchers to accountant. Now remaining 2,000, his remaining balance is 2,000. Now he has to receive 8,000 from accountant. So 8 plus 2, 10,000. So impress system means maximum amount. How much the maximum amount petty cashier can keep? It's called impress system. Here, not refill amount. Impress means total amount, how much he can keep. Some may keep 10,000. Some companies they can allow 50,000, 30,000 based on their monthly, normally monthly, okay, sometimes weekly or depends, but let's say monthly. Normally monthly amount of petty cash, based on that they will decide the amount. That maximum amount called impress amount. In this example, impress amount at start of period 10,000, 7,240 he has spent. So 2,760 remaining balance. How much he has spent, he can reimburse from accountant. This is called impress system. And here 7.6, next topic. So up to now, all the topics related to petty cash we have covered. So now reconciliation. Okay, now reconciliation, like bank reconciliation. I will ask one question. You can record this one also. Now we are going to discuss about why petty cash physical balance and petty cash book balances are different. Same as bank reconciliation, cash book balance and bank statement balance differences. So here also we have to compare both book balances. We have to compare the physical balance with the book balances. Petty cash book balance and physical amount sometimes it won't be matched. What are the reasons? One thing, petty cash book balance might be higher than physical balance. Other side, petty cash physical balance is higher than book balance. There are two situations. Okay. There are two situations. Petty cash book balance is higher than physical balance. Second situation, petty cash physical balance is higher than book balance. Why these differences are taking place? Reasons for differences given here. First option, the reconciliation shows that there is not enough cash in the petty cash box, which means cash book balance is higher than petty cash box. Let's say 10,000 is available in the petty cash book, but physically you have only 7,000. What are the reasons for those differences? Not enough cash in petty cash box. Then there are a number of possible reasons for this. Probably the most obvious, that cash has been that cash has been probably the most obvious that cash has been removed from the petty cash box without being supported by an authorized petty cash voucher. Without being supported by authorized petty cash voucher. Here, cash in the petty cash box is less, cash book balance is higher. But actual expense has been taking place, but petty cash vouchers are not available. Then what will happen? Recording part will not be updated properly. What's the scenario? This one 10,000 as per book, 7,000 as per box. So actually, petty cash voucher, actually expense has been taking place, but relevant petty cash voucher is not available to record in the book. Too much cash may have been given to the petty cash claim. So according to your book, you have given only 10,000, but actually you might have given 12,000. In that scenario also, sorry, too much cash may have given the petty cash claimant and not noticed either petty cash. Yes, too much cash has been given. As per your records, too much cash has been given and it has been recorded by the account in the books. The petty cash voucher may be missing. Earlier one is petty cash has not been raised. This one raised petty cash has been missed. Because of that, we have not recorded in the petty cash book. There may be more cash in petty cash than expected. There are several possible reasons for this. Too little cash may have been given to the petty cash claim. Opposite side of these 3 points. Okay, you can easily remember if you have been asked to write why petty cash box balances and petty cash book balances are different. If you have been asked to write 5 things, you can pick it from here. If you remember only 3, opposite side of these 3 are too little cash may have been given to the petty cash claimant. Petty cash voucher has been placed in the petty cash box, but no cash has been paid out. Voucher එක තියෙනවා, book balance එක අඩු වෙලා තියෙනවා, but actually it was not physically it was not paid. Some cash has been placed in the petty cash box and this has not been recorded. More money has been given, but it has not been recorded. Then petty cash balance will go up. Petty cash box balance will go up. Actually, according to your records, you have given only 8,000, but actually you have given 10,000. Then automatically petty cash box the amount will be higher than book balance. Clear? Any confusion? So here you should remember only one area. Then, if you remember only 3 points, you can write 6 points opposite side of that 3. And business risk in the cash management process, the risk of theft and disputes. Normally, cash management process risks are theft and disputes. That's the main thing. Receipts will be recorded incorrectly. Daily totals of receipts in the cash book should be compared with the total value of checks banked and money received by bank transfer. Any differences would probably indicate an error in the cash book records. So here basically risk in cash management, main risk is theft. Why we are not encouraging to keep bank notes and coins? Why we are doing? You are preferring online transfers and debit and credit cards because of this. Easily, let's say if you have one bag, if anyone take 1,000 rupees, you can trace easily. But in debit card, controls are there. In online transfer, controls are there, passwords are there. So, main thing in the cash management process, risk under risk. First point, theft and disputes. And second risk are the make overlap purchase process discuss sales process discuss risk के मोनोद की but I have told if you have been asked to write race, don't think too much. You can get the answer from the process. If any mistakes happen in the process, that is called race. So here also I told the one is there. Okay, that is separate thing. If you have been asked to write more risk, then now you have to pick from activities what we have discussed up to now. What's the activity? First activity we discussed on the cash management, recording. Differences between physical and cash book. That's a risk. Differences between bank and cash book. That's a risk. Unable to identify the differences. One point when we were discussing about the bank reconciliation, I received one point. Direct deposits. Okay, direct deposit. I'm not saying this wrong. That's correct. Okay, I don't remember the last class I discussed this one. So direct deposits. Normally, yeah. When I was discussing the bank receipt, slip things I have discussed. When I discussed slip matter, I have discussed this also. Direct deposit, I'm not saying it's wrong. It's okay. It's a part of business process. We can't avoid that one. But unidentified differences, unidentified balances, unidentified deposits. If you have too long unidentified differences, that is this. All businesses are having unidentified balance, unidentified deposits are there. You can't avoid. But those unidentified deposits must be reconciled and clear it at least once in 3 weeks. Too long outstanding unidentified deposits are not good for organization. Okay. So here receipts will be recorded incorrectly, and risk in the petty cash, unauthorized payments, petty cash in that money may be stored. So mainly you can write, if you have been asked to write the risk, recording part issues, not reconciliation with the physical balance, and theft and disputes. So quickly we will go through the internal controls of cash management. Main internal control in the cash management is approval process. Approval of payment. Each and every payment must be approved by the authorized person in the organization. So these are the internal controls. Bank notes and coins should be avoided. As much as possible, you should do the transaction through the bank, not in the notes and coins, because notes and coins will release itself. It's an inherent risk. Okay, involvement of banks, notes and coins is inherent risk because of theft and disputes. Proper cash book should be maintained. Simple thing. Proper cash book should be maintained. Daily collection of cash should not be used for expenses. It should be deposited on the same day or next working day. This is the most important one, control. In the practical and also most important one. So whatever cash you receive before 3 o'clock, okay, because banks are closed 3 p.m. No? So before whatever cash you receive before 3 o'clock, you should deposit on same day. If you receive after 3 p.m., next day, following day before 10 o'clock, you have to. It's a control, 10 or 9, it depends on company. But once you open the company, start the company, you should deposit that previous day balances also. Previous day after 3 p.m. receipts. It's the control. Let's say you have received 100,000 during the day. So you should not take some amount. Let's say 10,000. Example, 10,000 from your collection. First, you have to deposit, then you have to withdraw. Then only you can keep records properly. Okay, at the moment, reconciliation personality. So we are not saying you should not take from your collection. We can't say no, they are money they can collect, but there must be a proper controls. First, they should deposit. They receive 100,000, they should deposit first, and from there they should withdraw 10,000 or 20,000. Even they want 90,000, they can withdraw. That is their money, but they should not deposit net amount, because according to the records, 100,000 received. But if you compare with the bank slips, 90,000 is 10,000 is there. So 1 or 2 days, okay, you can reconcile. 365 days, can you reconcile that? So proper control is you have to deposit the same amount and you can withdraw for your expenses. Then you have control. This much amount I have deposited, this much of amount I have withdrawn. So this is the way of doing the cash deposit and withdrawal. The following source documents should be used with the approval of pre-decided limits, receipts and payment vouchers. Bank reconciliation should be performed. An approved petty cash impress system and petty cash voucher should be used. All payments, only authorized staff should be given the access to engage in electronic fund transfers. Yeah. Fund transfer, there are no online transfers. Online transfers also, we can't give everyone, we can't give access to everyone. In the organization, there must be an authorized person. 2 or 3 persons must be involved in the online process. That's fraud chances. So this access must be given to only authorized person of the organization. Pre-numbered source documents and checks should be used. Cancellation of invoices should be done. Avoid duplicate payments. Proper segregation of duties should be in place in all above steps. Again, I will tell segregation of duties is the most important internal control. You can see all these internal control topics. You can see this control segregation of duties. Okay. So with that, we will have a break. After that, I'm not going to do the question. We will do the question later. After that, we are going to discuss about the property, plant and equipment management. So fourth topic we are going to discuss about property planning and equipment management. So in short form, Property plant and equipment management. Here also, one thing I want to tell, recording part, before recording part, there are two things. One is recording, and first one, before recording, you have to make the purchase note. So at the time of making the purchase, what are the things you have to consider? When it comes to purchase, PP management, our scope is managing the PP, property plant and equipment of the company. Managing property plant and equipment of the company. So here, situations. We should know about the situations. What are the situations? What are the activities you have to take to manage? So first, we have to purchase the PP. And what are the managing activities you have to take when you are purchasing the PP? And second, once you make the purchase, what are the things you have to take actions to manage the PDP once you make the purchase? So these two aspects we are going to discuss under PDP management process. Okay. So first part, before making the purchase. Okay. So what are the management activities you have to adapt before making the purchase, before making the PP, property plant and equipment? First thing, every organization have capital expenditure budget. So here, before making the purchase, they should first aspect, they should consider cost controlling. So before, because PP is not a small scale of expenditures. If you want to make a PP purchase, you have to spend millions. But it's substantial amount. Okay. So when it comes to machinery, buildings, or motor vehicles, you have to spend substantial amount you have to spend. So this is not a small petty cash thing. So if you want to spend a big amount for business purpose, then you have to get proper approval. You have to get proper approval from the authorized person. So before getting the proper approval, whether we need to incur this expenditure or not, you have to think. In the purchase also, what's the first process? Identify the need. We want to purchase raw materials, whether this time we need to purchase this much of amount or not. That's the question. So here also, Nikam nine PP, one purpose at the end only. We should have a purpose. We should have a purpose to purchase the PP. So whether we need this item, this tangible asset, non-current asset, we need to purchase this time or not. So that requirement must be there. And other thing, cost. Not like raw material purchase. Here, organization should incur huge amount to purchase the people. Millions and thousands. So here, before making PP purchase decision, first they should have budget. The purchase also we have discussed budgetary control. So whatever expenses, small or big amounts, whatever expenses, organization should have a budgetary control. Within the budget only, they should spend the expenses. So here also, since it's a huge amount involvement, so here also every company should have budget, which is called capital expenditure budget. So next 5 years, next 3 years, next 4 years, how much the amount we should spend, whether we need to spend or not. We can't plan that purchase because huge money involved is there. So first, cost controlling is important. First, cost controlling is important. In order to control the cost, they need to purchase. They have to purchase. No, they can't skip the expense also. You can't skip this process. They want to purchase property, plant, and equipment to run their business, to manufacture their product. They have to purchase. From that, they can't escape. They have to make the decision. But that decision must be effective. So, in order to control the cost, first thing they will take, first activity they will adapt capital expenditure budget. In short form, we are saying capex budget. So that capex budget normally organization should have minimum next 3 years, 3 or 4 or 5 years. Certain future period they will prepare the budget. So basically, normal budgets are prepared based on the revenue. If they want to achieve this much of profit, how much revenue they have to target. So based on that only expenses, other expenses also will be budgeted. So likewise, in order to achieve this much of sales next 5 years, we need this much of PP arrangement. If we have this much of machineries only, we can produce this much of number of units. Then only we can achieve this much of target. Likewise, that's a link. So in order to achieve this much of profit, we have to incur this much of capital expenditure next 3 years or 4 years time. That's the concept. So according to that, they will prepare a capex budget. So by preparing the capital expenditure budget, what are the things they can achieve? What are the benefits they can achieve? They know next 5 years how much the amount they should incur. So if they have capital expenditure budget, in short form we can say capex budget, then they will not spend too much money into the PP purchase. They know next 5 years, yes, I'm going to spend under 10 million worth of money to purchase these expenses, this purchase, this PP purchase. Then they have an idea. So if they don't have any capex budget, they don't know which period, how much amount we should spend for what purchase. So they have to prepare themselves. It's not a small expenditure, right? Stationaries and petty cash are the traveling expenses. It's a huge amount. Involvement is there. So they need to arrange the money. So next year they want 50 million or 20 million investment in the PP. So they have to arrange the money. Suddenly you can arrange the money. There's a huge cash outflow is there. So they have to plan their next 3 years or 4 years big cash outflows. If you want to purchase a building, if you want to construct a building, or if you want to purchase a motor vehicles or motor lorries, if you want to purchase machineries for production, huge money outflow will take place. So suddenly overnight you can't take a decision. So as a good organization, they should have next 3 years, 4 years capex budget. Then they can plan their cash flows. Plus, they can control their soft asset. So let's say, for example, already a company has planned next 3 years budget. This year we are going to purchase 2 machines, which cost is 10 million. Okay, next year we are going to purchase another 5 million, 2 machines, 10 million. So this is their plan next 2 years. If suddenly anyone comes and tells, no, we need another 5 million, 10 million worth of machine to product to achieve this much of number of sales, authorized persons will not accept, because this capex budget has been prepared based on their requirement, based on their normal profit requirement. So if someone comes and tell we need to spend another 10 million to construct this building, another 10 million to construct to purchase these machines, another 10 million to purchase these motor vehicles. Why we should purchase? Because already we have budgeted, we have allocated certain amount, or maybe we have planned to allocate certain amount. If really necessary only, we should spend that money. We are working based on our budget. So if we put this capex budget only, we should have that capacity. We should have that capacity or ability to control the cost. Otherwise, certain decisions will spoil our cash flows. Okay. So a lot of organizations, mostly a lot of organizations have this capital expenditure budget in order to control the cost, because they are preparing the budget based on the requirement. Okay, clear? Why? What's the purpose of capex budget? To control the cost in future and put a pre-plan for PP purchases. They should have capital expenditure budget, which is called capex. Capital expenditure budget. First one, capital expenditure budget, they have to prepare. So next 3 or 4 years, they have to prepare a capital expenditure budget. So next 3-4 years, they should outflow their cash based on that capital expenditure budget. Okay. So now capex budget is prepared. Fine. Let's say next ABC Private Limited, next 3 years capex budget is prepared. Okay, this is the scenario. We will take a scenario and we will discuss. Let's say 30 million they have allocated for PP projects next 3 years, 25, 26, 26, 27, 27, 28. According to their yearly budget, in order to achieve their target, in order to achieve their profit target, they want to spend 30 million capital expenditure for next 3 years. That is their target. So now capex budget has been approved now. Capex budget has been approved by the authorized person, director board. Now this year, according to the capex budget, so based on their other budget, revenue budget, they are achieving their target. In line with their revenue budget, they are performing the actual performance also in line with their revenue budget. Okay, all are achieved. Fine. According to their plan, now time to purchase 10 million in 25-26 period. Time to purchase PP, 2 machines. Okay, already approved by directors, already planned. That is in the capex budget. Now they are going to make the purchase. Do they want to take approval from the director or not? At the time of purchase, do they want to get the approval from director or not? Already capex budget is prepared. That has been approved by the board. Now time has come. Now they are going to make the purchase. Already planned to implement. So now they are going to make the purchase. Now my question is, do they want to take approval from the director at the time of purchase or not? Question clear, Nani? So do they, company, other employees, whether do they want to get the approval from the authorized person to make the capital expenditure or not? Yes, Kilagina. No, Kilagina. Why yes? Then why yes? Because it's like this. Even petty cash also at the time of payment, you should get the approval. No? Even stationery. So some other traveling cost also, we should get the approval from the relevant person. Litigation scenario, who is the relevant person? Litigation. So here, even though we have budget, we have 30 million budget, we have already pre-planned. But at the time of purchase, we should get the approval from director, authorized person, because he should analyze again whether actually we know. Based on the budget plan, okay, fine. That is approved by him for future expenditure by analyzing certain aspects. But at the time of purchase also, who is the supplier? What is the amount? Let's say 10 million, they have budgeted. Okay, fine. And overall budget 10 million. If you are able to purchase around 9 million, you will take that option. No, already we have planned 10 million, definitely we have to spend 10 million the purchase. And if you are able to get that same item at 8 million, 8.5 million, 9 million, you will prefer that one. No, even though you have budget 10 million, if you can purchase that asset below your budget, then you can earn more gain. So at the time of purchase, that authorized person, even though budget is there, budget has been approved because to control the cost. This is the maximum amount we can spend. So actually this much of profit, this much of cash flow, this is the maximum amount we can spend for next 3 years for capex, capital expenditure. That is budget. At the time of purchase, authorized person should evaluate from whom we are purchasing, at what amount we are purchasing. Actually, we need to purchase this amount, we can postpone another 2 months time. So those things must be analyzed and approved by the authorized person. So here, before making the purchase, once we prepare the capex budget, second thing, approval must be taken from authorized person. Okay, authorized person. So here we are using capital property, plant and equipment, PP purchase, PP purchase authorization form. Okay, this authorization form must Organization may invite several potential suppliers to submit tender for large capital expenditures. The purpose of the vendor selection process is simply to decide which supplier should be given the contract. Which supplier should be given the contract. It's simple, normal way in supplier selection. Vendor selection. So identify a number of suppliers who seem to have the resources and ability to deliver the capital items required. Who has capable to deliver your requirement. Suppliers who indicate their willingness to tender for the contract are given specifications and buying. I have missed one part. So once suppliers are willing to provide the tender, then now we have to give our requirement. This is the specification of item. This is these are the specifications must be available in the machines, and our requirement we have to tell them. Okay. So then each supplier is asked to submit a bid or tender, and final date is given for submissions. The supplier should be asked to provide information that demonstrates their ability to deliver the PP item, time and specification. So this is the tender process. Preferable bid. Preferable bid. Always low cost, low price. What's the which tender normally we select? Always low price. The preferred supplier is selected on the basis of tender. Recommendations is given by manager who is responsible for tender process. The manager who is responsible for the tender process, he will see the prices quoted by the supplier and he will give recommendation. But that also must be approved by authorized person. Recommendation is given by manager who is responsible for tender process, but the final decision should be made by appropriate level manager. Clear? Manager का right आपने decision करके execute करना. He can give his recommendation. These are the suppliers given. They are tenders. 5 suppliers have been given. 5 suppliers have given. Out of that 5 suppliers, he is the lowest quoted supplier, and we have selected him. So this is the recommendation he can give. But authorized person only evaluate. He may ask, okay, who are the other suppliers given tender, given quotation. So then he can assess that one also. So he is the person, authorized person has power to approve the tender, approve the supplier selection. Very large contracts, for example, may require approval by the board of directors. Okay. The preferred supplier may be the one who quotes the lowest price. Always, not always, generally lowest price. That's why I have highlighted here. The preferred supplier may be one who quotes the lowest price. But second one, alternatively, other factors may influence the decision so that a supplier is selected who did not offer the lowest price. 90%, 80% lowest price, okay. But there are some situations you may select other suppliers who have not quoted, one of the other suppliers who has not quoted lowest price. What are those situations? This is important. This is you should remember. Okay. First one, more experience. Now A, B, C. Okay, 3 suppliers have sent their bid tender. A has quoted 100 rupees, for example, I'm saying. B has quoted, let's say, A has quoted 10 million, B has quoted 9 million, C has quoted 8.5 million. Okay, so normally which supplier we should select? C, because he is the one less 8.5. But we have selected B or A because 1.5 million, 500,000 only difference. No? Let's say we have selected B. Now we have selected B and we have we are going to give this our recommendation to authorized person, director. Now board of directors will ask, why you have selected B. C has quoted lower price 8.5 million, but you have selected 9 million B. Why you have selected? Now you have to give justification. So those justifications are one of these or combination of this. Because B has more experience on this project. Specifically this item, manufacturing of this item machines, C has more experience. Okay, so then even though 500,000 difference, we can take more accurate product from B rather than C. Likewise, we have to justify. So the chosen supplier may have more experience in the type of work that is subject of the contract. Okay, more experience on that field. Second one, have a track record. Already we have engaged with that supplier. We don't have any negative things of that supplier. Already we have engaged with that supplier. He has delivered a lot of machinery items to us, and those machinery items also perfectly working now. So good relationship. We have good relationship with that supplier and have good track record also. With that, based on these circumstances, we have selected this C supplier. The chosen supplier may be able to complete the work more quickly. It's like this. C quoted low price 8.5 million, but he can deliver the item only next week. I'm asking, this is most related to this construction work and contracts. The work can complete more quickly within given time. So lowest quoted supplier may take longer period than B. Likewise. So let's say this example, machine items 8.5 million quoted by C, 9 million quoted by B. Now we have selected 9 million %. We are justifying this third point. So how we can justify? C quoted lowest price. I'm not saying no. Okay. But C can deliver the item next week only. But B can deliver the item next 2 days. Within next 2 days. So with that, next 1 week, we can produce this much of quantity. Because of that, we can earn this much of profit. So speed also important. Because of these reasons, we may select supplier who has not quoted lowest price. Okay, this is important thing you have to remember. And now you have purchased the item. Up to purchase the item, you have considered capital expenditure, which is cost controlling. Second one, at the time of before making the purchase, you should get the approval, individual approval from the individual item based approval from the authorized person, and you have to select the supplier. Generally, low cost supplier we are selecting, low price quoted supplier, but certain situations are there. We are not selecting low price customer. We may select low price supplier, other suppliers. Those are the situations we are discussed now. Now we purchase the item. After purchasing the item, first activity, we have to record in the FAR, which is called fixed asset register or non-current asset. Both are same. Non-current asset register or fixed asset register. The record of non-current asset acquisitions and disposals. Not only acquisition, disposal also we have to record there. Simply say non-current assets movement, disposals and additions also. Is recorded initially in a non-current asset register. It is an internal document, internal control document. The acquisition or disposal of non-current assets is recorded in the non-current asset register before it is recorded in the accounting system. First, transaction must be recorded in the FAR. After that only, your ERP system or other accounting system must be updated. The register is therefore an important document, important record. So here, these are the information should be included in the FAR. All the information. I can say all the information related to the FAR must be recorded. Sorry, fixed register must be recorded in the FAR. All the information, nothing we should miss. You can see the description items. What are the items we should include in the? What are the details we should include in the FAR? First item, date of purchase, cost, accumulated depreciation, current year depreciation, depreciation method, date of disposal. If you dispose the asset, date of disposal. What is the sales proceed? And what is the profit also you can mention. Sales proceed minus accumulated depreciation. We can mention the profit also. Accumulated depreciation, code number. Likewise, all the information related to the fixed asset must be included in the FAR. Okay, the simple one, not that much of complex. Simple thing. FAR must have these details. Okay, with that we will conclude today's session. So rest of the things next class, small part is there in the PP. I will cover that one and we will start inventory process. And I have uploaded questions. Please try to enable. Those are related to sales process, purchase and cash management. I have not covered PP. That is PP, inventory, digitalization and payroll. We have separate question base. That after finishing this one, we will discuss those questions. So try and come from next class onwards. Each class I may cover 2-3 questions based on the time. At least definitely 2 questions I may cover. So just try just 3 questions. Okay.